Hello, and welcome to In the DeNovo, a series of video interviews with today's thought leaders on everything to do with treasury management, product management, and instant and faster payments, covering topics from payments to industry trends and other exciting subjects coming in the future. I'm Will Grace. I'm the host, founder, and managing director here at DeNovo Treasury. We're a consulting firm focused on helping financial institution leaders define strategy, transform client experience, and grow revenue in the treasury management space. Thanks for joining us and staying in the know within the DeNovo. I'm pleased to welcome for a second time to our program, Elspeth Bloodgood, Senior Technical Product Manager of Henry PayCenter. Elspeth is a payments professional with deep knowledge of instant payment networks, both RTP and FedNow. She also has ACH and checks knowledge as well as the Zelle network. She's an active participant on payments industry working groups and bill payment and faster payment and directory services. If there's an industry forum discussion on faster payments, more often than not, you're going to find Elspeth as one of the panelists participating in that these days. She currently serves on the Faster Payments Board of Directors, and she's not only a colleague, but someone I am lucky to call a friend, and honored that she's agreed to join us on In the DeNovo. So welcome, Elspeth.
Thank you very much, Will.
Yeah, thank you. We had you on earlier this year to talk about faster payments and the upcoming FedNow. And well, here we are in October, and FedNow released in July, and I thought it'd be an appropriate time to have you back for an update. And first off, welcome and thank you for agreeing to do this again.
Absolutely.
Before we get into the FedNow release, I thought it would be appropriate for you to remind our subscribers and listeners of how FedNow and RTP compare and contrast.
Okay.
Starting there for us? Yeah.
Absolutely. So first, FedNow and RTP are both real-time gross settlement systems. They're both built on the backs of an international standard called ISO 20022. One is operated by the Federal Reserve banks, and the other is operated by the clearinghouse. So if we think about where the industry is now, you have EPN, operated by the clearinghouse, and Fed ACH, operated by the Federal Reserve banks. You have CHIPS, operated by the clearinghouse. You have FedWire, operated by the Federal Reserve banks. Now we have this third option for real-time gross settlement instead of ACH or wire. So the clearinghouse is owned by some of the largest banks in the country, and they make that service available to, in general, their largest financial institutions. For this network, they're inviting all institutions to join, the same way that FedNow is offering all institutions to join. So major differences. They use the same messaging standard, but they have a different settlement mechanism. So FedNow is settling in financial institutions' Federal Reserve master account. And the RTP system settles in a joint settlement account held at the Fed for the benefit of all the participants. So that joint account service was created by the Fed specifically for payment settlement services for payment rails. So there's a settlement difference in terms of the joint account. That's a pre-funded account. For the Federal Reserve, dipping into someone's master account, you could have intraday overdraft. If you don't have a Federal Reserve master account, you have to contract with a correspondent, either a banker's bank or a corporate credit union. And in that case, those transactions settle into their master account. The second difference is that for RTP, when you have a service provider providing a connection into the network, you can only have one of those. So one financial institution, one technical connection into the network for RTP. For FedNow, you could have many processors who are all sending transactions on your behalf into the FedNow network. You could only have one of them receive transactions, but you could have multiple processors initiate send transactions for you. So that's kind of at a high level.
Well, also with the networks right now, there's a difference in the dollar amount, correct?
True.
Yeah.
$500,000 is the limit for for FedNow, and we're up to $1 million at RTP. That's because there's more experience in the RTP network. They started out on day one with a $25,000 limit. We're expecting them to go up to maybe 2 million next year. And we anticipate that that will be similar, that as people get more comfortable with the FedNow network, that they will probably raise that limit as well. So that's probably going to be a moving target over time for both networks.
Okay. Now, I'm familiar with the real-time payment network send capability that we refer to as request for payment. Does the FedNow network have a similar capability for send?
Absolutely. So people are used to ACH, where a big company can actually dip into somebody else's account, right? You
Right.
can go and
Yeah, you can
debit someone
debit,
else's
right?
account.
Right.
With these new networks, you cannot dip into someone else's account. There are no debit capabilities. So it's all credit push. So everything moves on authorization from the account holder, moves money from the account holder at one financial institution to another financial institution account at a second institution, a receiving institution. But that receiving institution is only getting credits. They're not, nobody's debiting those accounts. So instead, there's this idea of a request for payment. And that would be, you initiate a non-value message called a request for payment. It contains the information that would let an end user know what their obligation is, and they could, potentially hit a button to respond, to send the money off, to authorize that credit push transaction.
Yeah, because there's irrevocability in this network. It's credit finality, and
It
there's
is
no.
credit finality. You
Yeah.
can't, there is a good faith process. Once you've sent a credit, one financial institution can ask another financial institution to return the funds. But that's very rare. Those don't happen very often. And there's no obligation of the institution that receives that request to return funds to return the funds. So if the money's there and they're feeling good that day, they can. Now, everybody's supposed to play nice in the sandbox. And if there's a mistake, we're trying to make people whole, right? But that's not a warranty. That's not a guarantee you can get funds back. That is very different than a world of ACH, where if you just say, I'm returning it, you have to take that return.
Right, and it has the Reg E protections and things of that nature. Much different world with
Right. With Reg
RTP
E,
and FedNow.
remember, it's all about if I didn't authorize the payment, right? So if
Right,
I'm a
yeah,
consumer and somebody took over my account and sent money out of my account, the bank is liable, right?
right,
If my fingers weren't on the keyboard, but it
right,
does leave that space with credit push fraud or scams, where if I sent it because I was, coerced, that's still a gray area.
okay,
We're looking at a climate where regulatory interest is kind of evolving there, and that may come to pass over time. But and institutions should definitely keep their eye on that. But right now, if somebody, pretends to be your boyfriend and they aren't, and they get the money from you, then it's gone, right?
yeah. Because in theory, this is going to a device that supposedly is in your control, or it's going to your laptop or your phone or a tablet, and you're signing into an account as a consumer or business that
Yeah.
you should have control over, and you're saying yes
Yeah.
to this
And that's why
instruction.
some of this request for payment That's why it's been slow to come to market. One of the reasons, because the network's really worried about somebody pretending to be Walmart or AT&T
Yeah.
and introducing requests that aren't legitimate. So there's some business practices that are beginning to come out. There are some rule interpretation that the RTP network just launched this summer. We'll see. I think the request for payment applications are going to start coming to market in the next year, probably in 2024. But I think they'll be a little slow because the institution that sends that request is warranting that they are for a legitimate purpose. And everyone's trying to figure out how to manage that risk, which is a really interesting new risk to be managing.
Right. Okay. Very good. Great insight. So let's get to the update then. The Fed released the FedNow solution in July, right? It was in July.
Yeah.
And how did it go? Were there major industry impacts? Did it go as expected?
Okay, here's what I get in terms of people telling me how they perceived it, and then I'll tell you how I saw it, okay,
Okay. Yeah.
as someone
Very
who's
good.
in there. Um, what what I hear people say in the industry is, well, that was a big nothing burger. They announced they went live on the 20th, and I haven't seen, a lot of volume on this brand new network that nobody had ever used before. So 16 processors, 13 financial institutions went live day one. One of those, a credit union, took a trust fall and said, I believe that all this brand new infrastructure is going to work day one. I'm going to give an app to my members and let them send wild transactions. Day one on a brand
Oh,
new
wow.
network. Oh, yeah. And they did. And you know what? Their trust was, it worked. Those transactions went through. Our institutions that we've boarded have received them. It was fully baked. The system, over the time and effort that the Fed spent with all these pilot companies, et cetera, we haven't seen a major issue. Okay, so where is everybody right now? Everyone all the processors who brought 1 and 2 institutions live are proving out the service to their own satisfaction before they add volume. So with Jack Henry, we launched with 2 institutions. Today we have 26 live within just a couple of months, right? We're
Right.
on target to do hundreds before the end of our fiscal year next June. That's something we've shared publicly. Well, a lot of the other processors are basically in a similar place. They're testing everything out, their onboarding processes, making the banks are making sure everything's tickety-boo. Well, the first processor to announce that, or connection to announce that they are doing send transactions in volume, happened last week or so at the Faster Payments Council meeting, and it was Plaid. And they said, we're satisfied. We believe it all works. We haven't found any bugs. We're going to start releasing volume. And we've seen those transactions come through from Plaid. So over the next few months, all these processors, all these institutions are going to go, okay, we're satisfied. It's hardened. We believe it's going to work. We think our processes are baked. Now, keep in mind, July 20th, we've had August and September, 2 full months to do that, right? We're getting into October. We had a few days in July, so a couple of months. For RTP, when it started, it took a year of testing that the network was hardened. There wasn't sufficient. They had to actually do an update to that core functionality before they moved into volume. And the first processor, which was Jack Henry, by the way, came on in 2019, at the end of 2019. So it took 2 years for the first processor to engage. So we're doing in 2 months what the previous network launch did in 2 years. Now, everybody benefited from all the learning from RTP. That's not to say they did a bad job. It's just to say that this second time around, our expectations are that it's going to be instant. That's not probably reasonable. So we'll start to see these volumes come up. It's going to be a hockey stick. I can't tell you the day because it's all these individual decisions, but it's going to come.
Right. Which is interesting. I remember it was like November of 2017 when RTP did their first transaction. It seemed monumental. But it was two banks, right? And
It's
they
two banks.
exchanged one transaction.
Uh-huh.
And so it's so interesting that, yeah, here we are. And you're telling me, and my next question was, has adoption been as anticipated, slower than anticipated, or better than anticipated? And the way that you're describing this, it sounds like it's better than anticipated and going much
Well, I don't
quicker.
think the Fed really set expectations.
Okay.
The last month before launch, they sent out a questionnaire to all their processors. Will you be there day one? And they had the deadline for that like 30 days in front of the launch date, right? To get that information back. So they've really been responding to the industry stakeholders and incorporating that information and sharing it as it becomes available. And everyone's, like, yeah, we feel pretty good about this. We're going to go live on launch. 16 processors, 37 financial institutions. There was just a press release earlier this week. They're up to 100 institutions, right? And they're
Right.
expecting, based on what they've heard from these same processors, to have 300 institutions by the end of this calendar year, by December. So that's just a very quick time frame when you consider that how long it took for RTP to get to the same 300
Yeah.
financial institutions.
Yeah. So speaking of RTP, has the RTP network benefited from the FedNow? I mean, I know that RTP network has been taking off, the volumes have been increasing regardless, but have we
Yeah,
seen an impact, a positive
absolutely.
impact?
Absolutely. Um, One of the things that we've been recommending to institutions is that they consider receiving on both. It gives
Okay.
them not a single point of failure. It allows for the largest financial institutions who've made strategic decisions to send on one versus the other. It allows those smaller community institutions, credit unions, to not miss any of those transactions that are moving dollars into the institutions more quickly because right now deposits matter, right? So we're seeing about 50% of institutions who come to us for agreements that have not been on either network before choose to receive on both. So we
Okay.
think that the numbers are going to come up for both RTP and FedNow. And we've seen that with our institutions.
Now, when we might not be comparing apples to apples, but I'll ask this. In my processing days, it seemed that if you were trying to receive from both like the ACH, like on EPN and from, on like both ACH networks, that seemed to be a heavy lift. Is that a heavy lift to receive from both RTP and FedNow? It sounds like it's not. Is that because processors like Jack Henry have made it easy?
Well, it's not just us. There's a lot of processors out there who are
Sure,
connecting. So what they're
sure.
doing is acting as switches. They've got that high availability connection into and the heavy iron, the dual data centers, the dual connections and dual data centers. For RTP, they've got high volume MQ servers, right? So lots of infrastructure to connect out. But what they're doing is making it available as a hosted solution for community institutions, which means that it's relatively straightforward to implement. The institutions don't have a heavy technical burden, and they're trying to price it appropriately to make it accessible.
Okay. So a little bit different than,
It's
back when, you're trying to implement both ACH and EPN, and it just seemed like those
yes,
were difficult to do at the time.
absolutely. And the
Yeah,
difference really is that the technology now is so much different. and the idea of a hosted, payments as a service, or this hub aspect, it just didn't exist back then.
Yeah.
It wasn't available. People were talking about it. It was a twinkle in someone's eye. Now it's really there.
Sure. Do you think the need or urgency for a small, mid-sized financial institution to get involved with faster payments has changed with the introduction of FedNow?
I think some of the excuses for institutions to get involved have now gone away. So when we were first discussing this as an industry several years back, I remember going to faster payments, Nacha faster payments, and I heard institution after institution go, nobody wants it any faster. There's no benefit to anybody. It's never going to go anywhere. No, 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 because this was new and it was the first time in 40 years, and they didn't believe, right? And they were right, because there was no data. How can you this really is all about trust. But what we've seen is some actually very interesting things. Payroll is huge on the network. No one thought that was going to be, right? The wallet transfers. Consumers want to be able to send money immediately, person to person. They didn't tell their banks they wanted that. They went out and saw these wallets and said, I'm going to do that, right? But interestingly enough, they would prefer to get that service from their financial institution because they trust their financial institution, but they're not going to ask or wait. They're just going to go, right? So there's some really interesting data that's come out about 75% of consumers would prefer to have that P2P that they're now getting from Square and from PayPal and Venmo. They would prefer to get that service from their financial institution, but there's a real gap because their financial institutions aren't necessarily offering it because they want the money to go from the other person's account to their account without a stop in this third party. And even it's not just the boomers are actually less concerned about the money taking a hop, right? The young
Sure.
people want it to come directly into their transaction account. And the young people are the ones who really prefer that method of instant access. And that's probably because they've experienced having things held at the wallets where they couldn't get access to their funds.
Well, and that's an interesting point. You talk about disintermediation of the banks, and there's a lot of money sitting in those wallets.
Absolutely.
And when you talk about how important deposits are right now to financial institutions, how important they could be to community banks. This is a way that they could solve
it's a win for everyone.
Yeah.
If the institutions meet their customers and members where they are. They want this service, they want immediate transfer, and they want it in their financial institution account, right?
Yeah.
But there's a gap because of the number of institutions offering. But that's just on the consumer side. The other thing that this offers, and the thing no one expected, because when, again, several years back, we were all talking about splitting the meal after, we're all going out to dinner together and we're splitting the check.
Right.
Okay. That is not what's being done on the network today. One of the fastest growing use cases on RTP today is actually payroll. There is a rethinking of when an employee is due their funds for working. So what you're seeing that happening is businesses are making available earned wage access.
Right.
So if you have, as an employee, your car tire blow, you need $400 for new tires, and you don't have that $400, which is a data point. We all know that if there's a $400 emergency, some number of consumers just can't meet that. Well, what would the experience be if they didn't have to go to, a high interest rate, you know, place for a
Sure.
short-term loan, and they could just get an advance for the hours they've already worked for a couple of bucks.
Yeah.
That's there now, and that is a fast-growing use case. Work today, get paid today. Fast-growing use case. They're growing faster than those wallet transfers.
Hmm.
Um, termination pay. It's not just California that requires you to have the funds on the day of. It's, like 12 other states or something. Uh, the title companies are looking, they want this so badly to be able to close homes evenings and weekends. They want to not do a wire transfer for 2 cents, right? Because so they are looking at the good funds piece of this. So some people are looking at timing. Some people are looking at good funds. Small businesses are looking at control. It's not necessarily they want the money to go faster, but they don't want to release the funds until they absolutely have to, right? So they
Yeah.
don't want to. So it's about eliminating float. It's about getting dollars into the institution more quickly so that you have your deposits there. It's about meeting expectations. Things are going to change over the next few years that we don't even know about because different aspects of these new payment methods are going to solve problems for different segments of the population, both consumer and business.
So interesting about that earned wage access. It really started in the pandemic with the gig workers, and I think it was Grubhub that used that as an advantage for hiring during that time to incent hiring for workers. We'll pay you when your
Absolutely.
shift ends, and that
So
was a
that you can
very
have
interesting use case. Yeah,
absolutely you can have gas for the next day.
right.
Right? Now,
Yeah,
not everybody does it, but for
right.
those who rely on it, they pay a buck.
Yeah.
Grubhub, Uber, Lyft, all of them are top use cases on the network today. So it's about getting people their money when they need it in ways that better engage them with your product or service or with your company.
Yeah, and the real estate and property management one was an interesting one too. I think there was just an article in payments, I think it was in August, that real estate's been slow to adopt. And but you just mentioned the use case that makes the most sense, you know, closing on a large,
Absolutely.
on your real estate, on your home, to get those funds rather than using wire transfer. Large
Absolutely.
banks are going to not like to hear that, but I mean,
No,
eventually those payments have got to move to
now
a real-time payment. It's got to make sense.
Now, there's some hiccups along the way. Different states have
Sure.
legislation that says a good funds transfer is defined as a wire transfer, right? So
Wow, interesting.
so so there's going to be a long tail, but title companies are hungry for this. They just want it to be made available in a way they can consume it. So we
Yeah,
really have to stop. I mean, I think what we've got is a lot of processors who can move ISO messages, right?
yeah.
We have a lot of large companies who figured out integrations for use cases that work for them. We have to move down now and we have to think about making available use cases with front ends that solve problems across uh, horizontally and vertically in specific industries.
This is all very fascinating. What do you predict for FedNow? You got a crystal ball here over the next 9 to 12 months. What does Elspeth Bloodgood
Okay,
predict for
my
FedNow?
personal opinion
Yeah.
is that payroll is going to drive all of this for the next 9 to 12 months. I
Okay.
think I think that the payroll companies that have sort of figured this out are going to be really pushing into the market. And I think every single financial institution should be thinking about that as part of their planning. That should be on their list of things to discuss strategically is earned wage access, work today, get paid today. How am I going to facilitate that for my small and medium businesses? That's my crystal ball. Now, are there other things coming? Yes. Are there things coming that none of us have any inkling about? I'm betting 100% on that one.
Sure.
That
Sure.
in a year, we'll be talking about some new use case that's just that some really smart, creative company, some fintech has come up with that's going to take take the industry by storm. I'm sure that's out there, but I think short term, everybody should look to see what they can do with payroll, because that's going to be win, win, win. It's a win for the employer, it's a win for the employee, it's a win for the institution.
Yeah, or there could be some global event that happens that forces something. There's
Who
think
knows?
about with Check 21. I mean, that's it was a world event that happened that created that opportunity.
And
It's
then and that was 4 years before iPhones ever came out. Who knew we were going to
exactly,
take pictures of checks
or
to
checks.
deposit them in a financial account?
Yeah,
Nobody. I can tell
yeah,
you, nobody thought of that.
right. And interesting that we're still taking pictures of a piece of paper, and that seems to work for us yet. But we'll
My
see. That
secondary prediction is we may finally kill one payment method, and that's certified check. That
okay
might actually
might actually happen.
happen.
We might get
That
rid of a
there is
payment
an
method.
opportunity to kill the certified check. And I think that all of us as, financial institution supporters should root for that.
Root
I,
for
I
it.
don't know
Okay.
we can. We haven't killed anything yet, but if
We
we
haven't.
could, that would be a good one.
We have
It
never
would be like
retired. We've never retired a payment network, have we?
never retired a payment method. But
Oh
I
my.
believe this may help do that.
Okay. So I asked you about FedNow over the next 12 months. What about faster payments as a
It,
whole for the
in
next 12,
general,
9, 12? Yeah, in general.
I just think that the RTP reports that I think it's like they grow 8 to 10% per quarter and have done for the last 18 quarters. I would predict that that volume is going to continue at that pace, if not be even higher. That's what I think, is that volumes are just going to continue to go up. Now, is it a blip internationally right now? Yes, that the volumes are low compared to ACH, but I think that as we figure out these things, those volumes are really going to begin to increase as more stakeholders get more focused on delivering excellent experiences.
Wow, just a lot going on, and it's a great update. Elspeth, as always, your insights do not disappoint. Extremely informative for DeNovo Treasury and our clients and our prospects and our subscribers. Thank you for joining us today. And to all of the DeNovo Treasury clients and prospects and subscribers out there, thank you for tuning in to In the DeNovo, and have a great day. Thanks, Elspeth. Appreciate your
Thank
time.
you. Bye.
Bye. I love it when a good conversation comes together. We are so lucky to have friends willing to sit down and talk with us about the industry. For more content like the video we shared today, check out our website at denovotreasury.com and our YouTube channel at DeNovo Treasury. Thanks for joining us today for In the DeNovo. See you next time.